Hello and welcome to the Stock Planner channel. Trading is a constant learning process. In order to be a good trader, you must learn new techniques, study new indicators, and watch lots of YouTube videos. I'm a swing trader, and today I'd like to discuss how to use Fibonacci retracements to swing trade stocks. In other words, some traders use Fibonacci for their trade entries. I use them primarily for my directional, where I think the price is going to go, and then I can use that for my price targets and my stop losses. And there's many ways to plot them and to use them, and I'm going to show you how I use it in swing trading. I'm not going to try to teach you everything about Fibonacci retracement because there's many YouTube channels out there that have produced very good videos, and I'll show you one. In this video, I'm going to briefly say that you need to be successful, you need to have a repeatable system using known indicators that you have tested out and proved. I use MACD, RSI, stochastic RSI, and Fibonacci. And then I'll show you how I use them in TradingView, in addition to the zigzag indicator, which is a visual indicator for me. As I said, some traders use Fibonacci for entries. I use it primarily for exits, and I'll show you examples of all that. Let's get started. It's a lot of work. As I stated in the first sentence, trading is hard, and you must constantly try to learn new things, but you don't have to be an expert in everything, especially for swing trading, which is primarily a technical, short-term type trading. But you need to know a little bit of what's happening in the market. A functional analyst, you need to know and how to plan out your portfolio. You need to put stocks in your list that you know and love, and that have a future, especially since the market has an upward bias lately. But you also plan for the downward bias. You could be a valued investor where you need to know and how to read these income and outgo statements. And even if you inherited money, you need to be able to manage that. So if you have big money to play, you need to develop a style that fits that big money. If you got little money to play, you need to go ahead. Swing trading is great with little money or big money. So what I'd like to emphasize is that this channel is an educational channel. In some aspects, like functional analysis and balance sheets analysis, you don't have to be as good as the next guy. You can just be good enough, but you have to know a little bit about it. You have to at least know the name and what the company does. So let's get started. We're going to focus today on technical analysis, but to have a winning system, you have to have an idea, a trade idea, and you must analyze it, test it, put some tickers against it, and see how they work. Apply your indicators, get a signal, and then apply some money management where you're risking less than you're winning. In other words, when you lose less than you won. In that way, you always have a little edge. And after you place the trade and manage it, you restudy it and start all over again. We're going to focus on the indicators, and because we're swing traders, we're going to focus on the technical side of it. There is other factors though. When you pick your stocks, and you should pick stocks that fit in the overall perspective of the market, and ones that you think have a future, ones you think that will be good for the next decade. Good stocks, simple strategy, and good risk reward. So today, we're going to talk about Fibonacci retracements. But what is a retracement? Retracement is a pullback of a long-term trend. So just you have a trend, it pulls back a little bit, and then continues on. Let me show you what I'm talking about. This is TradingView. It's free. It's a charting program. It allows you to do some indicators. In just a moment, I'll show you the indicators and what they are. But I will just tell you briefly, this is the MACD, so you don't keep looking. MACD, stochastic RSI, and the RSI. This is the overbought condition, oversold. Overbought, oversold. When it's overbought, it might reverse. This is the MACD. Little red dots mean it might go down, and that's what happened. And green dot says it might go up, and that's what happened. These are indicators, and I receive how I trade as each day I run a report and get those signals. But let's just look at this. What do we have here? This is the zigzag indicator, and major zig, that's the dark colors. It's blue or red, and it's a free indicator on TradingView. And we have a long trend up. But what we really do is have some minor trend. Long up, pull back, up, pull back, up, pull back, up. And they call that pullback a little retracement. So if you knew how long the length of the initial leg or the initial trend, oftentimes it'll come back to the 50%. Let's see if it does. We got a leg here, and about half of that is right here. Did it pull back past that? Yes, it did. It pulled back. And so if you're sitting up here, maybe you can predict, and you know that your indicator says it's going down here, here. You might be able to predict where it's going with a 50% retracement. Let's try it again. We have a downward leg, about halfway over. It's here. Did it ever reach that? Yeah, and more. We have a downward leg here, and let's just use this up one here. Did it ever reach that? Yes, it did. So 50%. All right, let's try this one. Down, 50% of that is that, and it hit again. So if you were sitting right here, you had 50% of that, you know it's going to get, or you think it's going to get, but based on the 50% retracement theory, you're sitting here, you can make that bet. Let's look at another way of drawing it. We're looking at Lululemon, the zigzag, which is a perfect indicator, but it's only perfect because it takes into account future bars. It makes itself perfect. This is your major, and you got your minor legs. And so from here to here was a trend. And then you're going to try to figure out where the pullback is going to go. So let's draw, and this is a tool. It's in many charting programs, by the way. Fibonacci retracement. Everyone has it because it's so common. Everybody uses it. You draw the retracement, and we locate the 50%. 50% is right here, somewhere around 308. And we're talking about here, and now we're sitting up here. This is where we're at. These other ones don't exist at the moment. We had a leg, we had a print. We usually have to wait 2 candles, but and which way where is it going to end? Well, if you had a long leg there, you're going to say, well, we'll get to the 50%. And actually, we're looking at it. It did. Okay, but you don't know that information when you're right here. So it's looking like it's going to be a turn. The zigzag, we did not know what it's doing. And we're going to see what happens at that point. A day before, my indicator would have gave an MACD sell signal. And the rule for this MACD, zero lag MACD, is that the red dot means to be above the zero line. I like them when they're way above and way below. And then you can take that, basically that signal. If they're too close to the zero line, I don't like them, like this one, even though that would have been a decent continuation there. And it was above the line, but I don't like them too close. I kind of pass on them. But you get an indicator. You go back and look to see where the last zigzag leg printed. And you draw your fibs, and then you see how far the distance is between those fib lines. The fib lines they're numbered 50%, then you got 6, 1, 18, and all these numbers here correspond to the 1 standard deviation, 2 standard deviation of the probability curve. And lots of people look at these, and so they usually get hit. In our case, if we were sitting here and predicted it would go to 330, this is at 342, 330, that's $12. But if we predicted it go to the 50% line, which is here, that's $32. And it did. And at the 50% line, a lot of times people plan on it bouncing back and going and reversing. And if it continues on, it probably, there's most likely a chance that it'll go to the next one or the next one level. It means it's in a downtrend. But lots of people look to see it bouncing off the 50% line. And it basically did. It went a little below and then come back around and went up. Now that was past history. Let's get rid of this. And now we have a new print here in a reversal. So let's see where it's going. There, where's our 50%? Right here and right here. So if you're sitting down here at about 312, we'll get to 323, which is about a 10 or 11 point jump. And the numbers are over here. And we see that it did actually eventually retrace to the 50% level. But if you're sitting here, and maybe you want to place a bet a little closer, okay? This is where you can place your bets for your profit targets. And where would you set the stop loss? I'd set my stop loss down around here. So the process I get is I get a single, and there it is, MACD single, or a stochastics, and I don't really depend on all three of them that occur. A stochastics one is up, MACD is up, and this is your RSI, and I use a 4, and the rule is you got an overbought or oversold, and in this case it's oversold, and you might have it right here, and it come back around. It's oversold and in oversold territory, and comes back around, and that would have occurred a day or two before. So I get a single, I look at the last leg that printed, and then I see where it's going. You see how I'm using Fibonacci to predict maybe the future? Now this is an art form. You have to get good at it. But in the end, it's nothing but a bunch of lines, horizontal lines that a lot of people look at, that they've applied probability theory and the standard deviations numbers, and they become a self-fulfilling prophecy because so many people look at them. Get the single, put the entry, find your profit targets, pick one. If you're going to swing for the fences, pick one above the next one above the 50%. I like the 50% because I'm a firm believer in the 50% retracement theory. And then your stop loss. If you put your stop loss below your last high or low, or your last turnaround, which is, it's a fractal, by the way, or below the last zigzag, you reduce the chances of getting hit. If you put them too close, and a lot of times I do try to go for that 2%, 5% rule, and I get stopped out, and then it immediately just goes the other ways, because a lot of people are trying to risk 2% to make 5. Lots of people. Okay, you can go back to Fibonacci, the Investopedia, and get the definition. It's very simple. These are the levels: 23, 38, 61, and 78. And 50% is the one that's most often used, and I like it. But they're nothing but lines. And the market's going to do what its market's going to do, and nobody can predict the future. All this is a map, a roadmap that your price may get there. And it happens a lot. Now, I know I have not given you much a well thought out lesson on Fibonacci retracement. There's so many YouTubers out there that do a much better job. They have channels that dedicated to in education and tutoring and one-on-ones. And this particular channel is Trading 212. It has so many things out there: support, resistance, channels, MACD, RSI, everything you want to know. And it's well thought out. They've been doing it for years, and the speakers are well spoken. It's worth a look. This chart I got from Trading 212, and it's how to trade Fibonacci retracements, and it shows a printed leg, an uptrend, and then I showed you where you could draw your retracements based on that, your low and the high. There's your 0 and your 100. Then you find your 50% and see if you think it's going to get there, and especially if you're sitting up in here, you can bet that will it get there, and in this case it did. We're looking at it, but it also broke these support and resistance lines, and you can see that this is your support and this is your resistance. But when you're here, this becomes your support, this is your resistance. When you're here somewhere in here, this is your support and this is your resistance. It changes. These lines become your support and resistance in your trade. Anyway, a lot of people believe that once you hit the 50%, it'll bounce back and go up. This looks like a bounce, and there it went. You have to decide whether you believe it or not. Anyway, check this YouTube channel out. There's some other educational channels out there, but they do a better job than I do. I was just trying to show you how to trade them, how I trade them, and they're showing you why and giving you some instruction and some basics. I didn't want to reinvent the wheel. Buy and hold could use the Fibonacci. You don't really need it. Trend trading certainly could use the Fibonacci retracements, but swing trading and some day trading can use it. But if you get too low in doing some scalping, you're doing scalping based on your changes in price, and you're not really going to use the Fibonacci. I mean, somebody else put in the comments that they do, but a day trader would want to know where the overall support and major support levels and resistance levels are. But the swing trader, this is important. And the wish and hope is just going to look at Wall Street bets and do whatever those guys are doing there. But it could be successful and it could be not. All these things work, but I like the way I'm doing it because it lets me come in. I don't want to be a buy and hold because I don't have as much money as the big boys, and I want to use my capital swinging in and swinging out when I see some trend or activity or event that will change the direction of the market, and I'm trying to predict those changes, those swings. It's an art. Now let me give you some other examples. This is that channel again. But by the way, please like and subscribe. But when you're doing this and looking at Fibonacci, or you're looking at the indicators that I told you about, MACD, RSI, and the many other indicators in TradingView, do your own research and learn it. And if you do lose, don't blame some idiot like me on the internet for your loss, or don't blame the dog. Do your own due diligence. Back to TradingView. It's free. There's your indicators. These are all canned, and there's the free ones in the public library that the people have programmed. You can program this fairly easy. I'm programming in Omnibrug, which is another programming language, and I just don't want to learn a new one, but they're very similar. This is a zigzag. This is how you find it. That's the one I'm using with the HHLL, and I'm not making any changes to it. The zero lag there is as well, right there. There's several. You can try them. Zero lag MACD enhanced version, stochastics RSI, the relative strength index, and the double zigzag with HHL. Okay, that's the indicators I use. You're allowed to use 3 on your free version, and I have a little paid version. It's like $100 a year. I don't think it's very much. I'm not exactly sure on the price, but it's not much. And you get some alerts with it too. It's kind of nice. You can do a lot of things with the free version. I did it for several months and decided I want some more alerts and added. Well, this is John Deere. We're using the daily, of course, because I swing trade using mostly the daily and the weeklies. And you have a long uptrend and then a pullback. Well, let's get a little closer look. And we know that we draw our fib from the top to the bottom of the last printed leg using the zigzag indicator, and every charting package has a zigzag, and then you plot your fib. I showed you how to do that over there. Just draw the fib. And now what do we have? Why am I on this sheet? Why did I get John Deere and pick John Deere? Well, we have a signal. MACD says go up. It's deep like that because that was a long trend down. Long leg. Stochastics says go up too, and recently so did the RSI. We get somewhere around here, and this would have been a day earlier, but let's just use that. We got a signal to buy after earnings is over, so we don't want to trade around our earnings, but as soon as it's done, the news is out. So our indicator is saying going up. The zigzag here does not know what it's doing, because if it went down, it would have known what it's doing, but it doesn't. So and it suspects it's going to go up. I suspect it's going to go up too. Where's the 50? The 50 is right here. Do you believe it'll get there? It's about $3.75, $3.61. That's about $14. I believe it might get there. Or we'll get down here first. So how do we play it? Buy it here. Set your stop loss below your support so you don't get stopped out so much. And you can set your profit target here, but you would, to get this is a pretty wide distance here. So you're risking that. You can set it to stop loss a little bit, but you're risking that. So I go for this one so that you win more than you lose. And you just place your bet and go. Go for 380. So you lose 10 to make about 20. Good trade. And you can also take profit anytime you want. Or I could sell an option spread to say, I think that it won't get below 350 or 348, and I'm going to sell the option spread, credit spread, that says as long as it stays above 348 or 350 after 30 or 40 days, I'm going to win the trade. So do you think it's going to stay above the 348 for the next 30 or 40 days? I take that bet based on what I see here. Let's do another one. How about Disney? Disney. I haven't done this one, so this is a new one. I'm doing this on the fly. An MACD way below. I would love that. And I would have went back and did a Fibonacci retracement there. A stochastic RSI. That says the same thing, and so did the RSI. Same thing. So let's draw our fib. I see we just had our earnings. It's way behind us. Earnings is way behind us. Sitting here, we're pretending we're sitting there. We actually see what's going to go on. But we got the signals here. We got our signals here. In this case, it was pretty much all three. This would have been a little earlier. Yeah, they come around about the same time. You don't have to have all three. I just use all three. I use these three because they've been reliable, and sometimes usually a two hit, and that kind of gives me a warm fuzzy. Zigzag at this point didn't know what it was doing, and we were sitting here. But these candles didn't exist. Sitting here, took a trade. Just say it was at the right here at the high point, about 171 or something like that. Where's our 50? Let's find our 50 right here. If you're sitting there, do you bet it's going to go 50, or do you bet it's going to go there? Where do you step your stop loss at? Stop loss below support line, somewhere in here. And your profit targets are up here. You have to decide. You're sitting here, so you have to make sure your distance to there or there is more than it is here, because you always want to win more than you lose. And if you want to quick turn around, you would set it for here. So if you did that, you would have won and took profit out there. If not, you would have waited and took some here. And do you think it's going to get to there? Disney? What's happening with Disney? Summer's coming up. People are on vacations. The parks are opening up. Face masks are coming off. I don't know. I think that's a good bet. Optimism? Unless something happened with the market. So I do think this is a roadmap to greater and better things. Will it get to 180? I don't know. Nobody can predict the future. There's no guru out there that can predict the future. And by the way, this is swing trading using technical indicators, and I just used a fundamental indicator of the outlook of the market, the weather, the face mask, all that's fundamental stuff. So I do very much combine both fundamental analysis and technical analysis. This is how I use Fibonacci retracements, which is a retracement of a long-term trend. And I use the Fibonacci lines, particularly the 50%, but I use them all to use it as a roadmap to where there's a possibility of where it's going. I also use other indicators, the MACD, the stochastic RSI, and the RSI for trade signals and entries. And I use the Fibonacci retracements for my take profits and my stop loss. And because I'm an options trader as well, these lines are very helpful in setting my credit spread levels. I really do enjoy trading like this, and I hope you've seen some possibilities in it too. Thanks for watching. Remember, learn this stuff and develop your own system. It takes a little while, but this is not all that difficult, and you don't have to be perfect at it. Like and subscribe for more videos. The videos that I'm producing are getting better. I like what I'm doing, and my trading's getting better since I've been out and put myself out there online. Remember, though, don't blame me, and don't blame that dog. Blame yourself for your losses. Do your own due diligence, make some money, and buy that dog a bone. Again, like and subscribe. Catch you on the flip.